The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft, and a little bit richer host. We'll get into that in a moment. But starting to wet my beak, as they say. We'll get into that in a moment. But certainly, we have a market that's off 1 point on the S&P cash. We've got a lot of volume, 3 billion shares, and we are in the heart of option expiration, and I suspect that that is what saved the market today. I looked at the options last night, and certainly we had a range where we could get down to maybe 1895, but that would have been at the far range. We got to 1912, I think, this morning. And at that point, I started seeing all the premiums just get devastated. And normally, about 1 o'clock on a Friday afternoon, you're going to see option premiums, that part of not in the money in those, and kind of everybody was backing away, and actually they were selling huge amounts of puts into the market for expiration next Friday, and a lot of the stocks I was watching, especially the broker dealers. And so some of that, I've got puts that go off to December. And I figured they're going to suck out a great deal of them. I'm going to have to sit through 1 week of waiting for this market to rotate out of options expiration. So the most sensitive to those of a sideways market, I took some cash out on today. And on the daily newsletter, we had the VIX trade out there. I think I was in somewhere around, $22.50, something like that on the triple VIX, and we got out at around 33 today, so a good 50% day for a few short weeks of sitting on our hands. It should have been a little bit higher, and I have a feeling that we are seeing more sedated movement in some of the things that we talked about yesterday, which is the way the VIX is calculated. Before, you had a 15 and 45 day window on the way that the VIX is calculated. I will bring this up again because I know we're always getting new listeners. The VIX is basically a oscillator of two different times. One that the options are at least 15 days out. The other one at least 45 days out, or 43 days, something like that. That's the way it used to be calculated. Now it's more like 24 days and 34 days. So where you had a lot of volatility long-term and short-term moving it, you now is almost all medium-term. And, they did that so that they could start including weekly options. And again, most of the weekly options come in the week. So weekly options not having a great effect on the VIX itself so far. Don't think it will until you start seeing people put out options 3 weeks into the future. And since you're not going to get anything less than 24 days, those weekly options, unless someone is, going 5 weeks out, which doesn't happen a lot, not going to have a huge change. I think they did this preemptively, and I did have some time to go through what the changes would have been over time, and it's going to be slower to come down, it's going to be slower to go up, and not a whole lot, but I was thinking that you'd probably see the UVXY hit 37 today, but after doing some work last night, I think that the 33, 34 range that we got today is probably about where it should be, because it's just going to be a little slower. That means probably taking a little volatility out of that triple VIX and out of the VIX itself. Let's see where the VIX is right now when we are speaking to what do we have? VIX 1885. Certainly we busted 18, and that has been where the markets have always pulled back for the last pretty much 6 months. I think it's last February before we saw a higher than an 18 level on the VIX. I'm quickly becoming, I guess, not shortly, quickly becoming a expert trader in the VIX. I think we've played it 4 times, or 5 times, I think 5 times now in the daily newsletter, and had some major wins in it, and 1 loss. I think we were down about 10 or 15% on one time. It's a devil of a thing to actually trade. And you can only trade it when your back is against the wall, or you'll probably go broke pretty quickly. But I think I've gotten a fairly good bead on it. But, of course, the VIX was changed the way it was calculated on the 6th. So we are going to see a little bit more of that. But I spent a couple hours on the phone off and on with the CBOE yesterday, and somebody actually brought it up during the show in the den. And I put a link to it, but there is a white paper. And I think if you just put CBOE white paper VIX calculation, you'll see it pop up. It'll tell you how it is. I mean, there's some interesting math in it, but they go through and show you how to actually calculate it. But basically, the VIX is always counting down every minute till expiration. And that is telling you exactly, or trying to measure, actually, the out of the money puts and calls in the S&P, actually in the SPYs. But it is kind of an interesting idea of trading derivatives. Again, pretty a VIX option spreadsheets can be fun, Dave. I didn't have that much fun. I was rather tired doing them last night. But maybe if I had nothing else going on. But kind of interesting. Anyway, we've got a interesting day going on. So 50% profit out of the VIX, and a huge move. We had in the Tech Insider, we had puts, and we'll talk more about those in the 4 o'clock hour with Tom O'Brien. But we had puts that we bought below $5 and sold them pretty much above $12 today. So we had a nice little taste out there. The rest I'm going to be sitting on for a while, because I don't think they're going to have much of a bounce, and or I'm going to lose a lot in the movement. But we'll go through those charts, I think, in the Tech Insider hour tonight at 4:24 when we get back in that segment with Tom O'Brien. In fact, I bumped into him in the elevator on the way up, and we're going to be making some big money, I think, taking some big swings. I was on the VIX trade. I was hoping to hit a home run. I think maybe I hit a double or a triple today, because I thought maybe that 37 was in play, but we'll see. And maybe I'll get another chance at it. Didn't want to sell it earlier on the first 2 moves, mostly because I thought it was going to be problematic. But I think we're going to see this kind of thing slowly drift back off this high, mostly because option market makers would love for this market, if anything, to at least go sideways for the next few days. Ideally, if they could pin this thing at about 1950 a week from Friday, they would make now a ton of cash, getting rid of a lot of upside calls and downside puts, and keep the most amount of money. And normally that's a pretty good indication of at least where the market makers are looking. And I don't, 25 points up is not enough for me to get involved in trying to go long and get out of all of my positions. Because, of course, we could still get a Ebola scare, or someone else say boo, or a snot rocket from somebody off an airplane, and that would be it. But we'll see. Anyway, other things moving out here in the market, we still have, we're up 33 cents on the dollar index. I think that's probably tells you everything you need to know. But, yeah, that's probably about true. Somebody in the den saying they're looking at 1935 on the low side. I'm thinking probably 1950, because they blew out so many puts this morning in the first hour of trading and sucked out all the premium on the put side that pretty good indication that they think they've got a temporary bottom. This high volume, though, tells you that we're at least going to test 1912. I think probably maybe next Friday, next Monday, Tuesday, but I have a feeling we're going to go sideways for a few days and burn a lot of these puts that people bought this morning, thinking the market had finally cracked out of the door. But yeah, I can imagine 5-10 point intraday moves in the S&P now. But again, we're going to get into it. But I think the biggest thing we need to be looking for is to earnings. And I think some of these earnings are going to be good, and we're going to see a little bit of bounce in it. Some of these are going to be bad. We're going to have a bad day, hair day on them. But I think it's going to be a lot tighter, especially since we've let a lot of the froth and steam off this market, at least the initial steam, before we start moving down in earnest. On Tuesday, we've got Citigroup, Johnson & Johnson, CSX, a little choo-choo for you, and Intel. Dunkin' Brands on Wednesday, Travel Zoo, American Express, Las Vegas Sands, Netflix, and United Rentals. On Thursdays, Google and Capital One and SanDisk and SanDisk. Why did I do that twice? Guess I didn't cure it. I'm going to have to look at my one for tonight. Anyway, we always like to start off a little bit of history. And, of course, today in 1991, the term going postal was coined when a former U.S. postal worker, Joseph Harris, shoots two former co-workers to death at the post office in Ridgewood, New Jersey. The night before, Harris had killed his former supervisor, Carol Ott, with a 3-foot samurai sword. I guess they had to put it in there as 3 foot. Isn't all samurai swords about 3 foot? Why is the 3 foot in there? Is there a 6-inch samurai sword? Anyway, and shot her Venice? Anyway, in their home. After a 4-hour standoff with police, Harris was arrested. His violent outburst was one of several high-profile attacks through the early 90s that resulted in the additional phrase, going postal. Today, in 1991, as it all started. So other things we've got going on, we'll take a look at some of the stocks that are moving today. But for me, I think at least the short-term problem, maybe could we get a little push down, come to the close? I think so, but to me, it certainly looks like the market's a little bit balanced, and we're probably looking, if we close down right here, I would not be surprised at 1925 going into a weekend. Could we close flat on the S&P? I think we could. Maybe as low as 1920. Could be. It's going to be a little tough for me to say because it is probably going to still be a little bouncy, but I just don't see a huge sell-off before the end of the day now. But we've already turned 3 billion shares on the New York Consolidated Tape, so we've got volume right here in River City. That begins with P, it ends with L. It's got 2 O's in it. Pool.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As always, you can give me a call at 877-927-6648. You can post a message in the den, but I'm in the studio at the palatial TFNN headquarters, world headquarters here in Clearwater, Florida. And at this point, I don't have access to my email, so if you email me, it will probably go unanswered until Monday. So call me, 877-927-6648, as always. We're going to look at some stocks, unless someone else is going to call in and bug me, which I'm not going to say you're going to bug me. Just call in. Align Technologies. Going to look at some of these stocks. You know, there were enough of these stocks out here that broke through what should have been support levels. And is the volume big? No. Are they bouncing? No. And I'm going to go through my theme once again on the dog that didn't bark. These stocks should be bouncing, and they are not. And that is the part that is problematic in this market. That is that we had some fairly decent highs. They didn't get, they got tested on a lighter volume. We started moving down in a great deal of these stocks. And it's kind of interesting. Now, Align Technology, good example of this. What I was looking at in this is the July 2nd high had 1.2 million shares at $57.79. Went up against the April 4th high. So it went above it. It closed below it. It did it with about half the volume. That's everything you probably need to know in markets right now. Price and volume is working extremely well. And at least on the upside. On the downside, we're seeing the same thing, which is, you have some fairly decent volume. So is it going to bottom here fairly soon? I think the answer is yes. On the 17th of October in 2013, 4.5 million shares. We're going through that with about a million shares, about 500,000 shares today. Does that mean that these things are going to bounce? Maybe a little. But to this point, we really don't have a lot of bounce in these stocks. Normally, they get a stock like that should just reverse intraday and be up. On this one, maybe $1.50, something like that. Really not seeing that. So the market is kind of laying there, you don't want it to just lay there, do you? You want a little action. So anyway, as we continue. Cabela's is another stock out here, a little bit better out here, but certainly light volume. The retailer of a lot of sporting goods, I guess it'd be. I've never been in one. I've seen their catalog. Maybe I've been in there, Cabela's. I think I have. Maybe it's another one. I think I've been in Bass Pro Shops, which is kind of like Cabela's. July 23rd low, $56.02, 1.5 million shares. So we get into that, we go below it. Right, 2 cents yesterday. Get a little bounce out of here, but you certainly, with all the volume in this market, this thing should be getting a lot of love. 300,000 shares is not a lot of love for the bounce out here. So do we go back up? I think probably a little bit. Can we see movement back into probably resistance at about 58, 58.25? Then we're going to come back down, and at that point, you're probably going to get volume. You're probably going to bust out a lot of these lows in the stocks that I'm showing you here today. But right now, not enough energy in a handful of these things to really blow things apart. Cameco, I've very been interested in these uranium miners, mostly because they've broken through some of the long-term support. Now we're underneath even the November 16th low of 2012 on Cameco. A lot of people shut down their nuclear power stations, pretty much tired of going broke in Australia, in Japan, and freezing and not doing anything. So they're going to fire all those generators back up fairly shortly. I think Japan got yet another approval, and they're probably going to go back online in, I'm going to say probably in, I think it was February. So we might have a little bit longer to go for some of these uranium suppliers to go. And it is going to be interesting. That November 16th, 2012 low at $16.41, 1.8 million shares. Now you got 1.5 million shares as we kind of busted through it up to 2.6 million shares. But today, 1.5 million shares. So it does look like this thing's probably going to continue down for a little longer. And I think it's going to have to be some of these reactors really firing up to really get it back out here. Now, the highest volume low was on October 4th, 2011 at 1668 with 4.1 million shares. So when this thing turns, it's probably going to bounce right back up above that 1668. But I can't say that you're going to get that anytime real soon. Probably going to go sideways. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question in the den to take a look at natural gas and some of the plays on this. And I have a feeling, I guess the question is, where is the buy on this thing? And the problem, I think, is as long as the entire energy sector is under assault, that it's going to be kind of tough to actually get a lot of movement in these. The old saying is, you sell what you can, not what you have to. You want to sell when you can, not when you have to. But unfortunately, the worst mistake that traders make is basically selling their losers and, selling their winners and holding their losers, hoping their losers come back. And unfortunately, some of the better stocks, I heard Kramer whining and crying, why are they selling Boeing? Well, in a down market, the tide takes all boats down. And I would say that Boeing isn't one that I'd want to be shorting, but it's not like I'm a big baby about it. I understand that when everything is going down, it's going to be problematic for the entire marketplace. Whether the stocks really have their future changed at all. And I understand Boeing. They've got 600 planes worth of orders. Even if they lost half their orders, they still have the next 3 or 4 years worth of orders. So it's not like it's going to change how many they deliver, and by the time 3 years rolls around, the economy will come back and their orders will come back. It's not like all those people go away, and I'm kind of surprised to see Boeing move, but that's part of being in the market. It is a market of stocks, but about 50% of a stock's movement is almost always around a, what can I say? It's always around the general trend of the market. And the problem is when you come into thinking that in a big downturn, whatever you have is not going to be plummeted and buffeted. And especially if it's been doing well, it's normally the first to be sold. And the worst stocks get sold at the bottom by traders who didn't take care of their stops. And I think we've got a lot of people that are probably in that range of fairly new traders looking at the amount of margins that are in the market for the NYSE. A little tougher to tell in the NASDAQ, but I imagine it is similar. Anyway, when we look at NG, natural gas, I tried to buy UNG around 21, and about 3 days later I hated the way it was moving, so I got out of it. And it's not that it's going down, it's just that many of these may not be going up. In fact, you had a nice move here with Schneider Energy, which the question was about LNG. The problem is, I think this stock was running a great deal based on the thought that natural gas was going to go up this fall, and that a lot of natural gas used for industrial production, and the thought is with the market pulling back, that industrial production will come down a little bit. I think you see a great deal of natural gas used at plants, especially for steel and auto making to generate power. I think that the auto market also shows that maybe a lot of that natural gas is probably not going to be used for those things this fall, or at least not as much. And I think that goes back into seeing some of these stocks that went up to the highs come back, bust their ABCs, and come back to what is going to be fairly decent support levels. I just question about the idea of buying these things thinking that they're going to go up in a hugely declining and weakening market. It's very tough for me to ever see gold go up in a market that's hugely going down. And actually there are things in the gold market that make people want to sell it. Maybe we'll talk about that another day, or maybe today if I get time. Anyway, LNG, yes, if everything was great, you'd say a buy. What you didn't get, though, was the last 3 days of high volume coming back into the sign of strength, which was on May 30th this year. So most likely, is this thing going to bust it? Probably not. Is it going to hang around? Probably, what is that, about 64, 65, 66? I think probably the best thing you could hope for is this thing consolidates and goes sideways for a while and burns off some of this energy off the top. Maybe you get a little bounce on it, but I don't think it's going to be big. Let's see else. You know, a lot of people making comments in the den. I don't think it's all this other stuff. To me, the thing that would scare me is not Ebola, not the flu. By the way, the flu killed, 17 million in 1918? Or was it 25 million? The flu killed a ton of people in 1918 or 1917. I'm trying to remember when it was. Maybe it was 1908. So some of these things do come out of left field. But what I'm talking about is probably the most significant thing, which is the amount of margin that can come out of this market. So I'm not so worried about the fact that we've got something like Ebola rolling around, or the chicken flu, or anything else. Much more worried about the massive amount of margins in this market. And normally, the markets don't bottom until that margin money comes out and they are forced into margin calls, because most people continue to believe. And I think when you see it it is more about that. Let's see. What else do we have? GNLG. Let's take a quick look at that. GLNG. Okay. Well, Golar LNG Limited. Well, it certainly looks like this thing's coming back to support, which is going to be around $45. Again, you had way too much energy out here, so you're going to probably look like it come into this consolidation or congestion zone that ran from where April 17th of this year to finally had a sign of strength on May 28th. But that consolidation range right in there is probably going to be support on this, so you're probably going to look back in there. And see what else we had. And GLOG, G-L-O-G. G-L-O-G. Yeah. Okay, you got a nice little bounce out of this thing today. You're saying it's into the sign of strength. Not a bad looking chart here. Probably the best one of the companies out here. And if I'm not mistaken, these guys are the liquefied tanker bunch. I remember when this thing went to IPO. Vessels and liquefied natural gas. Yeah, it is. LNG. To me, this would probably be the best play in the natural gas field. And the reason why is, imagine if Putin cuts off natural gas to Europe. If we could tie up a lot of these liquid gas and natural gas tankers and pull them into ports up in Germany, we might be able to circumvent old Mr. Putin. But to me, probably the best looking chart of the bunch. I like the fact that you had the huge sign of strength on the 16th of January this year, and as we look at that volume and then the volume coming in, it is about half, even though it was 4 million shares yesterday, so I don't like that. A little less today, 2.5. So you are finding support on this, but to me, moving around our natural gas and making clients out of the Baltic region that Putin's talking about cutting off. I don't know how fast these guys can work, but to me, this would be the best thing, is it probably is not as much and sensitive to the price of natural gas, and maybe even will get better as natural gas gets cheaper. So I would kind of keep an eye on this gas log. I always liked it from the IPO. Thought it was probably one of the more intelligent plays, at least in bulk shipping. Out here, but that one would be the one I'm looking at, especially if Putin, I tell you what, if you read overnight, Putin is cutting off Europe, especially Germany, for natural gas, I would be all over BLOG. So an interesting play out here if you want to look at that. So anyway, if anybody else wants to call, they can at 877-927-6648, and or in the den wants me to look at some other things. I'm going to look up the big flu epidemic, but I'm thinking just an absolute ton of people died in that 1918, 1906, something like that. I remember they dug them all up because no one still had that strain of flu, and they got it out of the bodies that were buried in pits. 20 million, Basil said. And that's the kind of thing that can happen. And every once in a while it comes along. There are 5 that aren't reported. I did find out about Ebola 2 today that I didn't know, and that is that in the bodily fluids of a human, that alive or dead, cured or not, once you get it, the Ebola strain is still active for 90 days. So everybody that's got it or had it is still a hand grenade waiting to go off. But anyway, gas log like that. Anyway, we're going to look at some of these other charts. I got plenty of time here. Chemtura Corporation, CHMT. Another one of these out here that looks like maybe it's bottom. This thing had a lot of energy coming back into the May 1st low at 21.96, 3.5 million shares. We've gone below it. You really need to close above 21.96, but it is kind of interesting out here. Okay, what else do we have? Cons. This thing has been eviscerated. Probably has Ebola itself. Horrible earnings out here, but even this thing right now making a little few signs of life. The low from September 24th is $26.60. 2.3 million shares. We have, a little under 1 million today, 1.3 million shares yesterday. So we are seeing some of these stocks kind of wash out. Cons is kind of like a Best Buy meets Aaron's Rents. From all I can tell, they've got a lot of stores, but kind of tough to see what's going on in this company. But my website of the week actually is in this field. And if you join me and Tom O'Brien tonight, we'll talk about it. Some of these stocks that should have stopped going down still haven't. We broke lows in 3D systems with lighter volumes, and my first thought is that this thing's going to get down to about 27 and there's going to be a buy. But it's probably going to have to go sideways for 6 months to consolidate out all the losses. In fact, one of the other stocks that I'm going to talk about tonight that we made a lot of coin on was a 3D printer stock, and we made some good wood on it. We're going to talk about that tonight, but back here on this, right after this high, I think on January 3rd, I gave out a report in the Tech Insider that said the 3D companies had pretty much topped. And I think we hit maybe 3 or 4 different of these 3D printers on the short side in the Tech Insider, and made some really good wood, and again today. So 3D printers have been very, very good to me, with apologies to Garrett Morris out there. Very, very good to me. What else do we have out here? Some of these other stocks breaking lows on lighter volume. It's not much lighter, but Dover Corp, DOV, this thing may get a little bounce back into the trading range. You didn't want to see any more than 3 million shares. I think this got about 2.5 million shares. So it is weaker. It didn't like a lot of these stocks are testing lows on 50,000 shares compared to 5 million, but they are out there. We're talking more about bulk shippers. Diana, this is another one that would have told me that I think that these markets were ready to bounce. And the best I think we've got out here is a doji. But this certainly went under the high volume low of July 29th with 2.8 million shares. You got right to it with 2.3 million shares on the 24th of September. But not more volume. But these last few days have all been light volume coming back down here. And, this could just be a huge deleveraging in some of these losers. But certainly, maybe a doji, maybe you've got a low in here. You really need to close back now above $8.83 before I'd really want to get involved in this. But certainly some of these may get back up to that level. I suspect, like I said, we're going to see a lot of very small B2C moves over the next few days, and that's going to tell us a great deal. So market's a little weaker than I thought. I thought maybe they'd hold this thing up a little bit. Off 7 points on the S&P cash, 3.2 billion shares. But you never go broke taking big cash money. You can go broke taking small cash money and then having losses. Tough to go broke making big wads of cash. Be back in a second.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, more discussions in the den. I think, if you wanted to have a position or something for 3 or 4 days, I'd probably go into some kind of spread and see just how much of the premiums can burn off over the next week or so. But I have a feeling it's going to be tough. Market's probably just a little weaker than I thought. I think, we'll see how the market closes out here. But massive volume on a Friday, almost 3.3 billion shares. So you're certainly going to get 1912 retested. But my guess is that they're probably going to keep this thing up. And I think a lot of people probably bought Friday expiration puts for next week, and they're going to probably keep it up maybe through that Friday, maybe even the Monday, the next two. Probably not going to see higher prices. So I'd probably be going with spreads here if you wanted to make a little money. It may be too much effort for too little money, and maybe be using up my focus on something like that where hunting some of these other big rhinos and elephants out here and giraffes. Might be better use of my money. I'll have to think about it over the weekend, but certainly interesting. So as we see this market kind of turn around a little bit, it is interesting. You figured we'd be at the lows right now, or below them early on when we had a real opportunity to blow through them. That's kind of what I'm thinking now. Now, unfortunately, kind of down in the danger zone again. But market's kind of really bubbly here. I could see some moron from the street hit the sell button between now and close and keep it up. And of course, there's a lot of people in the option market that need this market to probably hover 10, 15, 20 points higher than we are at right now to preserve a lot of their cash and options. And we could see a lot of people pushing in that. We've got other stocks of interest, and it is interesting to me. First Solar, I've been warning people about being in any of these solar companies, mostly because of the pending election. And whether you, whatever side of the fence politically you are sitting on, it doesn't look good when you can't have a candidate for the Senate say that they voted for the sitting president in your own party. And if you've seen that little bit of news, again, we go back in. In fact, a lot of people think that maybe a lot of the weakness in Tesla was him talking last night after the close about how much he is dependent on subsidies from the government. All of these, which I think are going to probably go down the tubes, most of them run out in 2016 and 2017, and the chances of them getting that through the House are probably nil and none, much less having a Senate go in the opposite direction too that might try to get rid of them even earlier than that. And again, none of these companies can make it without subsidies. I would have put if we would have put just half or a fourth of all the cash into the subsidies for the companies into coming up with an answer on something that could be a market winner, I would have liked it a lot better. Unfortunately, a lot of people don't like the scalpel. They like the sledgehammer approach. And I think what it calls for in technology are things like space shots and, of course, the DARPA projects where they give out 10 or 20 million and we get $100 billion in sales years after it for things like the internet, other things like that. Anyway, I will see you in about an hour and 20 minutes doing the Tech Insider with Tom O'Brien tonight. I'm sure we'll have a lot of comments with him over the next 2 hours. We'll talk about my big win for today in the Tech Insider, and we'll see you Monday, if not. Sell when you can, not when you have to. Cover when you can, not when you have to. We'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.